Many investors have come in and told us that they're afraid of when the Fed will begin easing its stimulus program in the not-so-distant future. Our next guest is here to say there will be plenty more rounds of stimulus to come. How about another 96 rounds? On the phone with us out of Thailand is Mark Faber, the editor and publisher of the Gloom, Boom, and Doom Report. It's always good to talk to Dr. Faber. So you don't think the Fed is finished yet, or?
No, I don't think so, because I see several possible scenarios. Either the economy next year is still relatively weak, and don't forget, the jobs report on the surface was very good, but if you analyze the details, the majority of jobs gained were part-time jobs,
right,
and job losses were in the manufacturing sector and in full-time jobs. So I think it's a very mixed picture. Secondly, the Fed announced kind of a possible tapering at some point. Thereafter, the bond market tanked, and the stock market also eased. I think the Fed would like to see the stock market going down somewhat so they can go public and say, look, we need to ease more, otherwise asset markets will decline and we have again a problem.
Right.
So the thinking at the Fed is, regardless, they are in a bad position, but they will argue it's better to print than not to print.
Okay, so let's talk about what type of assets you would want to own in that environment if you're right, if this does continue for some time. You talked about stocks and bonds. What about gold? We were showing at the bottom of the screen while you were speaking the fact that you'd rather own bonds or gold than own stocks in this environment. I was reading before we came on the air an interview that the website Business Insider did with Jim Rogers, who was saying that he wouldn't be buying gold now, thinking it's in the midst of making what he called a complicated bottom. He's got more to go.